Good morning, traders. This is John from Stock Strategy Circle, and I just had a quick update about a position we're getting ready to close out. A couple of weeks ago, we put out a trade alert for TPG based on a consolidation breakout that it had gone through, and that stock is now up 14% currently, and it's starting to look weak. And as I've said many times before, we don't marry stocks here, we just date them. And so 14% return over a couple of days is pretty good. So I'm going to go ahead and sell it right now. And so that's it. If you were a member of Stock Strategy Circle, you would be receiving an update right now in the phone app letting you know that this position has been closed out, along with a link to take you into the chart so you can take a look and try to decide what you're going to do for yourself. So what is my thinking here? Why did I decide to close this out? So this chart consolidated along with the general market, and then it broke out and it made this huge run over a period of a couple of days. One of the things that we like to trade is what they call springs and upthrusts. And a spring is when you have a price penetration below a previous area of support, but then that same bar closes back above that area of support. And usually it'll do it on relatively high volume. And what that shows you is that there's market manipulation going on in order to clear out stop loss orders so the manipulators can buy up as much stock as possible before they move the price back up. That's called a spring. On the other hand, if you see a new high in price on relatively high volume and then there's no follow through the next couple of days, that typically indicates selling activity by the manipulators. And so what they will tend to do is they will run the price up, make a new high to collect up as many buy orders as possible before they drive the price back down. And so one of the ways you can detect this activity is using your volume profile. And let me see if I can zoom this in here. It's going to be kind of hard to see. But as I zoom the price in, here's the area where we went long down here. So this is what they call the point of control. It's the heaviest volume area on the chart based on whatever time frame you're using. Well, if we get up here, we see the high that was made at 59.99-ish, somewhere in that area, and there's a big peak in price. So there was a lot of selling activity that took place there. Then we went into a little consolidation that lasted for about a week, and we have another high in this price. So there's a developing point of control right there around 58.58. Well, we're below that point of control. So because we're below that point of control, this area is now going to act as resistance. And so at this point, the general market, to me, is actually looking like it's going to be weak for a few days. And I may cover that in a different video. But we can go ahead and take the money and run. And I would watch this stock. It's going to remain on the buy list. And if we get another close above this trend line that I just put in, then that's going to tell me that this stock is done with its down leg and it's probably time to go back in and get it again. I suspect this one's going to go all the way back down to 49, 49.50. It'll probably get a bounce right here around 51. Now, I don't really trade price predictions. I trade the current market activity. So if this stock gets down to 51 and I see a spring and it's a tradable spring, then we'll probably buy it again and you'll get a trade alert and all of that, assuming that there's money available in the account to invest and that there's not anything else going on in the market. We trade the market as it develops. All of this guessing about what's going to happen next, in my view, is a bunch of nonsense. Anyway, This is John with Stock Strategy Circle. Happy trading.